the time has arrived where Greg should become the chief executive officer of the company at year end.
Warren Buffett just stepped down as CEO of Berkshire Hathaway, the man who's been called the greatest investor of all time, gone. At first, it sounds like just another headline. He's 94. It was bound to happen, right? But here's the thing. When Buffett exits, it's never just symbolic. It's a signal. And what it signals now could have huge implications for the economy, the markets, and your money. So what's really going on? Buffett's departure comes at a strange time. While most of the market is still limping from recent sell-offs, Berkshire Hathaway is sitting near all-time highs. Tech stocks are down. Debt is piling up. Inflation's being weird. And yet Buffett's ship is cruising steady. And now, the captain steps off deck. You're probably thinking, okay, but does this actually affect me? Yeah, it does. And here's why. Buffett isn't just a CEO. He's a barometer of market confidence. A walking signal flare. When he moves, the world watches. Because he doesn't act on impulse. He acts on signals, trends, gut-level pattern recognition sharpened over 70 years. But here's where it gets interesting. The moment Buffett stepped down, he didn't just leave the helm, dropped a warning on the way out, and it had nothing to do with stock. Instead, Buffett gave an old-school speech about trade wars, tariffs, and global tensions. Stuff that sounds super dry until you realize he's talking about potential economic war between countries with nukes. Yeah, you heard that right. In his words, tariffs can be an act of war, and the way the United States is handling global trade, he's not loving it, especially the chest-beating tone of winning trade wars. That kind of messaging, it's not just arrogant, it's dangerous. Let's break this down for a second. Buffett once pitched an idea called import certificates. Basically, it was a way to balance trade without sparking political drama. The goal? Keep America from running massive trade deficits while still encouraging global cooperation. But here's the twist. Buffett's idea was dismissed. Too gimmicky, too complicated, not sexy enough for politics. And now, we've gone full throttle into classic trade war slapping on tariffs, poking rival economies, and declaring victory like it's a football game. But some of those rival economies, they've got nuclear weapons and bruised egos. So why should you care? Because when global tensions rise, markets react, commodities spike, currencies shake, supply chains stretch and snap, prices on everyday things, food, gas, electronics suddenly jump. And the Fed? The Fed gets put in an impossible spot. Imagine trying to land a plane during a lightning storm with one engine on fire. That's the Fed right now. One wrong move and things spiral. Rate cuts too early? Inflation flares. Rate cuts too late? The economy stalls. It's threading a needle with oven mitts on. In fact, there's a bigger storm brewing. Buffett stepping down lines up eerily well with the next big Fed decision. Coming up, the Fed will decide whether to pause or cut interest rates. Here's the catch. The United States government really wants a rate cut. Badly. Like, refinance the national debt at lower costs badly. But inflation isn't playing nice. Right now, the inflation data doesn't fully reflect the impact of tariffs. But it's coming. Once those numbers hit, the Fed might be forced to act. And if they act too late, boom, new inflation wave. Cue market panic. That's why Buffett's move matters. He's not just stepping down. He's stepping back away from what could be a mess. Quietly, but deliberately. Think about it. If you were sitting on one of the best performing portfolios in the world, and you saw storm clouds on the horizon, wouldn't you consider getting out while everything still looked perfect? You're not alone if you feel uneasy. This is where things get personal. Because if the world's most patient investor is walking away, maybe it's time for all of us to stop and ask, what does he see that we don't? It's not just about stocks or dividends. It's about signals, sentiment, shifts in power. Buffett's always been the guy who plays the long game, but even he knows when to step back, slow down, and brace. So what can you do? First, don't panic, but do pay attention. Start with your own finances. Check your exposure to international markets. Reevaluate any over-reliance on single sectors. Look at how interest rate changes might impact your mortgage, credit cards, or investments. Second, stay informed, but avoid the noise. Not every headline deserves your stress. Be selective. Filter for signal, not volume. Third, watch the signals, not the hype. When someone like Buffett speaks, it's not loud, but it's never random. Watch what he does, where he moves, where he parks cash. Those are the breadcrumbs. And here's one more thing that doesn't get talked about enough: real estate. Yep, the housing market could absolutely be impacted by Buffett's resignation, even if it seems unrelated at first. Here's why. When someone like Buffett leaves the stage, it shakes investor confidence. And confidence, or the lack of it, seeps into everything, including housing. If markets wobble, people hesitate. They delay buying, builders slow down, lenders get stricter. Now layer on higher interest rates or even just the threat of demand, you've got potential buyers freezing up. Suddenly, those open houses feel emptier. Mortgage applications drop. Prices stall or dip. On the flip side, if rate cuts come too aggressively, inflation could heat back up. That means higher construction costs, squeezed supply chains, and fewer new homes on the market. And don't forget, commercial real estate. Office buildings in big cities are already struggling with vacancies. If investor sentiment continues to sour, we could see even more strain there. That spills into banks, local economies, and job markets. And remember, Buffett wasn't just a stock picker. He invested in housing-related businesses too. If he's backing away now, you have to wonder what he sees in the broader landscape. Either way, Buffett stepping down in this climate is more than just a passing headline. It's one more stress test on a housing market already walking a tightrope. So if you're thinking about buying, selling, or refinancing, this is a moment to pause and reassess. Not to panic, just to get clear. Real estate moves slower than stocks, but it reacts all the same. This might also be a time to watch investor psychology. Are people acting out of fear? Are they chasing safety or betting big on risky plays? Pay attention to where the smart money moves. It often tells you more than the headlines do. Keep in mind, the markets thrive on confidence. When that confidence starts to crack even just a little, the ripple effect can be massive. That's not fear-mongering. That's just reality. And right now, we've got all the ingredients for a very delicate situation. Remember, Buffett has seen just about every market cycle you can imagine. Recessions, bubbles, crashes, you name it. And through it all, he stayed calm and calculated. But if even he is choosing this exact moment to bow out, that's worth noting. Especially when his final message is more about geopolitics than price charts. Because the truth is, economics isn't just numbers and trends. It's people, emotions, fear, overconfidence. And the moment things tip too far in any direction, markets react fast. So if there's ever been a time to pay attention, it's now. Not because it's time to panic, but because it's time to be smart, to be curious, to be just a little more aware. So yeah, Warren Buffett just stepped down. But maybe the real story isn't about him leaving. Maybe it's about the kind of world he's leaving behind, and what you choose to do in it. If you got something out of this, drop a comment and let me know your take. And if you want to know how the Fed's next move could flip the market, check out the next video. You won't want to miss that one.